US listed shares of PDD. This is the owner of the online platform Temu, plunged over 28% in New York after it warned of slowing sales. Our tech reporter Annabelle Droulers is here in Sydney to talk through it. And yes, disappointing when it comes to the revenue miss, but was it more about kind of the warning that we heard in terms of how tough it's going to be going forward?
Yeah, that's right. I mean, when you take a look at sort of the headline figure here, we saw revenue coming in at 97 billion yuan, and the estimate had been for around 100 billion yuan. So yes, it's a miss, but again, as you say, it was really about that outlook, because we heard again and again from the co-founder Chen Lei really stressing that the current trajectory that the company is on is not sustainable. And I think you can really think about, well, what is the current trajectory, or what has been the trajectory of PDD? And it has been really that big run up in share price. We actually even saw last year PDD overtaking Alibaba in market cap, managing to really attract a lot of value, particularly through Temu, that's its offshore e-commerce arm, that was even starting to test the likes of Amazon, Walmart. But this has certainly come at a cost, and it really seems to have come at a cost on margins. There are concerns, as we said, from the founder there, or co-founder, saying that competition not only expected to stay, it's expected to intensify here, and that is really one of the key risks.
And the aggressive international expansion could run into regulatory headwinds.
Exactly. That's another really big problem facing Temu and of course PDD as a whole here. But what we understand, at least in the EU, for instance, is that they're working on a proposal possibly to close a loophole, essentially. So it would be more difficult to buy cheap goods online and bring them into the bloc. So that's one thing that could be introduced, and primarily targeting, perhaps, this is what Bloomberg News has been reporting, but primarily targeting retailers from China like Temu. We've also seen, of course, US giants that are really paying attention to PDD's strategy, which is essentially connecting factories to sellers directly, removing the middleman. That's how they're also offering those cheaper costs. And you've got Amazon, for instance, looking to introduce a similar service. And we saw PDD a little bit under pressure when that was announced a couple of months ago. So again, not only are you facing more regulatory scrutiny, you're also facing retailers that are catching up to that distinctive model.
What does that mean for the future of PDD? Could we see more global expansion given all of that bright side that you talk about?
Actually, there's an interesting report out from Bloomberg Intelligence, and they're a little bit more optimistic on the outlook. Yes, they're saying that this latest set of earnings certainly will be difficult, or a set of challenges facing the company over the shorter term. Longer term, though, they're actually still optimistic on PDD's opportunities or its outlook here. They're saying that sales could jump more than 20% annually through 2027 if they continue to add e-commerce market share via the Temu app outside of mainland China. So even though they're looking to seed some margin gains, they still could attract more customers, more merchants, also expand their global ecosystem. So these are all some of the positives they're looking at. As I said, they are seeing that revenue jump of more than 20% for the next few years.